Welcome to Get Rich Education. I'm your host, Keith Weinhold. The top-selling finance author of all time, Rich Dad Poor Dad author Robert Kiyosaki returns to the show with us again to discuss how your teachers never taught you about money, nor did anyone else, and how to identify fake investment assets from real assets today on Get Rich Education. MC Laubscher is the host of the Cash Flow Ninja podcast and president of Producers Wealth. He is on a mission to help you achieve financial independence and freedom as soon as possible. He achieves this by integrating the infinite banking concept with real estate investments to increase your returns and recapture cash flow that you are not even aware of that you're losing. MC shares the number one strategy of investors in his holistic wealth creation course at yourownbankingsystem.com.
Learn the easiest way to create wealth and passive income with real estate. Now you can access the best deals without the stress or hassle of having to find, renovate, or manage those investment properties. Norada Real Estate saves you time by providing you with passive income investment properties in some of the best U.S. markets. Learn more at passiverealestateinvesting.com and download your free copy of the ultimate guide to passive real estate investing. There's no obligation and nothing to buy. Simply visit passiverealestateinvesting.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE, from Florence, Italy to Florence, Alabama, and across 188 nations worldwide. I'm Keith Weinhold. This is Get Rich Education, and you are back in that place where financially free beats debt-free, and I'm joining you from Fort Lauderdale, Florida today. Thanks for being here, but you're not here for me. You're here for you. Here's how most people think about investing. They take, say, $100,000 of cash, put it into stocks, bonds, or mutual funds, keep it in there for a few years, and say that it appreciates in dollar-denominated value, so later they pull it out, and they've now got $120,000, and they might kind of cheer or breathe a sigh of relief on what they feel was a successful investment. Their investor round trip went from dollars to an investment vehicle and back to dollars. Some would contend that that is what a fake asset investor does. A real asset investor instead might sell their successful rental single-family home that they've held onto for a few years and then keep those proceeds in dollars for just a short time and then use those dollars to trade up for a cash-flowing duplex. Their round trip instead went from a real asset to dollars and then back to a real asset. And that's when they might breathe a sigh of relief or have their cause to celebrate. That is how the investor mindset differs from one that invests in real assets versus one that invests in derivatives. And I first heard some version of this investor round trip between cash and assets articulated by Russell Gray. That's how a real asset investor thinks. Your investor round trip is not cash to cash like most people behave. Instead, it's asset to cash back to asset. Now, if you look at a market like the stock market, you can pick a 10-year slice almost anywhere along a timeline and paint whatever picture you want to make it look like, either a dour picture or a rosy picture. Well, I'm going to pick a 10-year slice that looks rosy for stocks. It was about 10 years ago that stocks, as measured by the S&P 500, bottomed out for this generation, we'll call it, and that was about 700 points. Well, the S&P has nearly quadrupled since that March 2009 low. That's close to 17% per annum since then. That substantially exceeds the stock market's long-term return average. Well, let me ask you, even if you were invested in the stock market all that time, how did it improve your lifestyle? How did it substantively make your life any better? Maybe not at all. It might just be a paper gain. If you weren't being paid an income stream each month that you held onto it, which is where your chance for this conversion to a lifestyle comes in, then I don't know if that's an investment at all. It's speculation, and there's no gain realized until you sell it. You actually have to get rid of it just to get the gain. During that same time period, the last 10 years, United States GDP grew 30%. Well, I just told you that equity markets quadrupled nearly. That's 400%. A 400% market gain on just a 30% GDP gain. And, well, you can begin to understand some of the disproportionality of relating a derivative market to the reality of tangible production and how valuations can become more easily strained when you're not dealing with real assets. It does not make any sense. There's a disconnect there. Now, real estate can be manipulated too. It's usually bought with leverage, for example, but real estate is just not as vulnerable to the same distortions like stocks and derivative products are. Now, your financial advisor is going to get scared if you start telling him or her that you want to invest in real estate or start a self-directed IRA or a QRP, as it might be, because that means that you're taking the money away from the advisor and they can't manage it and get fees. Your financial advisor might instead tell you to go get a REIT. That way your money stays with them. An REIT, a real estate investment trust. I don't think you want one of those. See, a traditional financial advisor that doesn't invest in real estate themselves, they generally don't know what they're talking about, and that's a problem. You want real property that you control. Actually, today's guest, Robert Kiyosaki, discussed that in one of his more popular books, The Cash Flow Quadrant. He said that a real asset like real estate is ideal, IDEAL. It stands for income, depreciation, equity, appreciation, and leverage. You can't get that if you buy a REIT. I characterize that similarly to Kiyosaki, but somewhat differently as I roll in the inflation profiting benefit that you receive from the leverage. But in any case, we both agree that when you have direct ownership of cash flowing real estate, you do have 5 profit centers typically. In the late 1700s, when the U.S.'s first paper currency, the Continental, was created, it was so quickly overprinted and inflated that people lost faith in the notes. The expression, not worth a Continental, that was a popular term. That came to mean something that's utterly worthless. In 1913, the Federal Reserve was created. In 1944, Bretton Woods established a near international monetary order in a post-war world, and it pegged currency exchange rates to gold, and that system only lasted until 1971. That's just 27 years. So what happened in 1971? It was August 15th, 1971, which was a Sunday night. President Richard Nixon came on television and told Americans and the world that you can no longer convert the dollar into gold. And unusually, Nixon's decision was made without consulting any members of the International Monetary System or even his own State Department. And soon, the crux of what would become known as the Nixon shock appeared. Let's play just a short piece of the national television address from 1971.
The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
I'll put a video of that in the show notes for you. That way, if you want, you can see that Nixon said that he did this in order to stabilize the dollar. Well, of course it didn't stabilize the dollar. This did just the opposite, as this soon ushered in an era of high inflation. So Nixon told the world that he's no longer allowing dollars to be converted into gold at the Fed. And what he did is he blamed a nameless, faceless villain for all this because that was convenient to do. He said it was because of speculators. So this Nixon shock, as it became known, sometimes you'll still hear people refer to it as that. Basically, that closed the gold window that made the dollar no longer convertible to gold directly. I mean, a citizen can still go out and do that on the open market, of course, but Nixon basically broke up Bretton Woods that was just established 27 years earlier. It was a negative balance of payments, growing public debt incurred by the Vietnam War, LBJ's earlier Great Society programs, and monetary inflation by the Federal Reserve that made the dollar become increasingly overvalued. Now, just take a look at a greenback today. Just pull a $20 bill out of your wallet if you're a place where you can. Get a $20 bill out of your purse or your wallet right now. You see Andrew Jackson's face on it. Notice at the top of the bill, it says Federal Reserve Note. Think about it. That means that you are a note holder. So you are the person owed. The government is the note maker. They are the one that owes you. But since 1971, you cannot turn it into gold any longer. So what is it good for then? In a sense, your $20 bill and other Federal Reserve notes of other denominations, they're only good for paying taxes. And because other people need dollars to pay their taxes too, they will trade you goods and services for your Federal Reserve notes. This is why having an income tax is important to the Fed. It creates demand for these otherwise worthless pieces of paper. And the real irony is that the Federal Reserve does not even need taxes to pay its bills, and they know it. That's right. I said that the Fed knows that they don't even need taxpayer income to pay its bills because they can just print more Federal Reserve notes, which we know is dollars, to pay their bills, because the amount they can print is no longer limited by its convertibility to the amount of gold that they hold on to. Remember, when you print lots of dollars, the dollar loses some value. It's like slicing up a pie. If you cut a pie into 8 pieces, well, then each piece is 1/8 of a pie. And if you look at the menu and decide to buy a slice, you base your value decision on the price and the size of the slice. But what if the guy in the back of the bakery making the pies decides he wants to get more slices out of the same pie, so he cuts it into 16 pieces? Well, now you're only getting a sliver. But technically, it's still a slice, just like technically it's still a dollar, but it isn't what you thought you were getting. You were ripped off. The lesson is to be careful not to measure your wealth or economic activity in dollars, even though I think we are all susceptible to doing that, because dollars are perverted now. So dollar valuations can be misleading and easily manipulated by those that want to tweak the statistics. Instead, measure wealth and economic activity in units of real value. It sounds easy, but it's hard to do. That is because for your entire life, all of your conditioning and conversation and thought patterns and financial news has trained you to behave and think in terms of dollars or pesos or yen. And we call this money, but it's really currency. In 1970, say you could have bought a 3-bed, 2-bath house for $30,000. In 2020, which is 50 years later, now that same 3-bed, 2-bath house is $300,000. But its value is the same because it still sleeps 3 people. Over 50 years, what happened is that the dollar was just debased tenfold. You have more dollars, but what's exactly the same is your prosperity. Investing money in a property is not the same as saving money or saving currency as it may be. Investing money in a property is better because even if the dollar gets so debased that it gets completely destroyed, which history shows us every currency eventually goes to zero and needs to be replaced, well, your rental property will almost certainly just be denominated in whatever the new currency is. And this is really the essence and importance of investing in real assets. Robert Kiyosaki says, don't save. Why would you save money when they're printing money? Because we're not in a pre-1971 world any longer. Rich Dad Month rolls on today with Robert Kiyosaki. The previous 3 weeks, we featured Kiyosaki's Rich Dad Advisors here on the show. Robert was first here on the show with us in 2016. You might remember when he and I told you about how the rich don't work for money. Robert was here again in 2017, and that was shortly after the last presidential election and the Trump inauguration. And Robert and I reminded you at that time that you are the president of your own life. In the rich dad world, there's something called a doodad. Maybe that has something to do with the dad word, like rich dad, doodad. But in any case, in essence, Robert says that a lot of people buy doodads, much like a boat, for example, a boat that just depreciates while barnacles grow on the bottom and the sides of the boat. Well, rather than buying a boat right away, buy a cash flowing property first and use the income stream from the property to service the debt payments on the boat. Additionally, you can rent the boat to someone else. Now you've created arbitrage, leverage, up to 2 income streams, both the rental property and the boat, and you've basically transformed a doodad into an asset. Of course, Kiyosaki defines an asset as something that pays you while you hold on to it. If you feed it, it's a liability. If it feeds you, it's an asset. That's why the house that you live in is a liability and not an asset. What about the State of Alaska Permanent Fund Dividend, known as the PFD? Robert likes asking me about it, and he and I have discussed this before, though we didn't discuss it on the show, and he wants to discuss it today. So for context, every Alaska resident gets a payment from the state every year, and it's typically an annual payment of between $1,000 and $2,000. And I mean every state resident gets it. So a husband and wife with 4 children, all between the ages of 2 and 12, would mean that all 6 of them receive this PFD every year just for being alive and breathing and existing. Yes, this is a real thing. It's kind of an interesting real estate situation. Basically, the state of Alaska gets revenue from the oil companies by leasing out state land to private oil companies like ConocoPhillips and BP and a bunch of others. The PFD was designed to be an investment where oil money would be put aside into a dedicated fund for future generations who would no longer have oil as a resource at some point. It's not given out because Alaskans live in a harsh climate and they need more people to live up there or some nonsense like that. If you're a new listener, I live in Anchorage, Alaska 9 or 10 months out of the year, specifically for the great quality of life there. Well, few things in this world are more popular than free currency. See, Alaska's last governor failed to win a second term partly because he reduced the PFD payout amount to help balance Alaska's budget picture, which got shaky when oil prices began their decline almost 5 years ago. The PFD was studied and it was shown to not decrease employment. You can imagine that if residents got maybe a $50,000 payout every year, that would have a deleterious effect on employment because some people would choose not to work. That's some context so that you know what's being referred to here. We're talking about the importance of investing in real cash flowing assets like real estate with the top selling finance author of all time straight ahead. You're listening to the show that's created more financial freedom for busy people just like you than nearly any show in the world. I'm Keith Weinhold. This is Get Rich Education. Finally, Total Control Financial gives you checkbook control of your 401k and IRA money to invest in real estate. It's time to get your retirement money into your own checking account, but you've got to avoid the little-known tax that you'll pay with any self-directed IRA. Instead, it's time for the QRP. Learn more and get your free copy of the QRP book by text messaging QRP in all capital letters to 72,000. For a real estate investor like you seeking an income property loan, go to Ridge Lending Group, NMLS 42056. Over the years, you've heard President Chaley Ridge generously devote her time to you here on the show as a guest. Ridge provides investment property loans in most U.S. states, and you're going to find out how they've helped more people realize their dreams of real estate financial freedom than any other mortgage lender in the entire nation when you get started at ridgelendinggroup.com.
Hi, this is Rich Dad Advisor Garrett Sutton. You're listening to the always valuable Get Rich Education with Keith Weinhold. Don't quit your daydream.
Best known as the author of Rich Dad Poor Dad, the #1 personal finance book of all time, our guest has challenged and changed the ways tens of millions of people around the world think about money. He believes that each of us has the power to make change in our lives, take control of our financial future, and live the rich life we deserve. His perspectives on money investing often directly contradict conventional wisdom, and he's an outspoken advocate for financial education. Welcome back to Get Rich Education for your third appearance, the greatest selling financial author of all time, Robert Kiyosaki.
Hey, Keith, thank you.
Yeah, it's so good to have you here. Conventional wisdom, Robert, says go to school, get a job, work hard, save money, get out of debt, and invest for the long term in the stock market. And I know that is like nail screeching on a chalkboard to you because you are exactly the opposite. And you say that that's not serving people. Tell us about that.
Well, if you just look at that stupid phrase, save money, why would you save money when after 2008, I don't know how many trillions they printed, and then they dropped interest rates? There was the San Francisco Fed just came out, they said they should have dropped interest rates below zero. So that actually destroyed millions of people who had savings in the bank. And yet people still say to their kids, save money. I mean, what is wrong with people? But the problem is the government prints money, and most people don't know that. So they work hard, they print it, they pay taxes, and they try and get out of debt, where I do exactly the opposite. And it's a tough message to get across, as you know. I'm sure you've had your challenges talking to individuals with no financial education.
I have, because a lot of times smart financial education does contradict conventional wisdom. You mentioned something interesting, Robert, negative interest rates, which did occur a few places in the world. And negative interest rates, it's so difficult for people to wrap their minds around that because they've never experienced something like that. That means if you're a depositor at a bank, you need to pay the bank just to have your money parked there. Now, in the United States, we're not in that condition today, but really in the same vein, if you're a depositor and you park money at a bank and you even get 1%, that's less than the rate of inflation. So you are effectively still, just like you would be in a negative interest rate environment, you're still paying the bank for them to hold your money for you. That's why savers lose.
You got it. But it's worse than that, and it's not a recent thing. This stealing money from savers has been going on for thousands of years. It's called today the fractional reserve system. So let's say you put $1,000 at the bank, and the bank then can lend out $9,000 of your money. So that devalues your money by $9,000. So borrowers come, they put that money in another bank, and again, they lend out $9,000 more, or whatever the number. I'm not good at math. But the whole system was designed to rip off savers. And, when I say that, it's like being a heretic. They want to burn me at the cross the next day. Because everybody worships at this mantra of save money or save your money in a retirement account. And, Wall Street's just ripping you off. I sit there going, why are you guys doing this? And the main reason is because our educational system teaches us nothing about money. So, unfortunately, people like lemmings, they just do as they're told.
You're right about people doing as they're told. A lot of people out there, they don't have any financial education, but yet they act so confident in their financial answers. For example, they say something like, oh, the 401k has got to be the way. Save all you can in that. And I think it's just because of the context they're in, just because everyone else around them is doing it. But all those people around them have never had any financial education either. So that's why they keep saving all that they can.
Correct. And that's why, if I could shamelessly plug my next book coming out soon, it's called Fake. And it's fake money, fake teachers, and fake assets. And so what happened is in 1971, the US dollar became fake money when Nixon took the dollar off the gold standard. And then what happened is we have fake teachers. These teachers know nothing about money. Would you take financial advice from a school teacher? That was my poor dad. And they're good people. Don't get me wrong. They're really good people. They mean well and all this. But they're giving financial advice to school kids. And then these school kids grow up to be our leaders, like some of these socialists running for office right now. And we wonder why we're in trouble. And then Wall Street sells us these fake assets. The definition from Rich Dad, Poor Dad of an asset is something that puts money in your pocket. And liabilities take money from your pocket. So what happens is when you put your money in a 401k, it's taking money from your pocket and putting it in the pockets of the bankers. Just have to look at the financials. Watch how the cash is flowing. But the average guy says, so yeah, the 401k is the way to go. Yeah, it's the way the bankers are picking your pocket. So I'm not saying it's good. I'm just trying to wake people up, like same as you're doing. And I feel for people right now. Alaska, you guys have that CPF. Is it called the Central Provident Fund or something?
Oh, the PFD, the Permanent Fund Dividend, a check everybody gets just for living here.
It's coming apart, isn't it?
Yeah, it is. A lot of people rely on that. It's too bad. There's become a dependency on it. And of course, not a dependency on themselves to learn more and invest in their own education. No. I think some of the conventional wisdom out there about saving, a lot of people defend things like the 401k by saying something like, well, I can be a millionaire by investing in the stock market. But a millionaire, a net worth millionaire, that doesn't really mean much these days. In fact, over 30 years, just at a 4% inflation rate, I've crunched it out, Robert, $1 million would only be worth $308K. What's $308K going to get you? 2 good years or 8 lean years? So I think a lot of it's pretty indefensible. A lot of the returns reported from mutual funds that are in a 401k, those returns get eroded by things like inflation and emotion and taxes and fees and volatility. A lot of people just don't account for those sort of things.
That's why I said in my book, fake, they're called fake assets. You put money into your 401k and it makes the bankers richer. It's a thing called assets under management. When you listen to these financial experts say, well, Joe's fund has $500 million in under management, they're collecting fees on that $500 million in management. You're not making anything, but they're making money. So that's why my new book coming out is called Fake Money, Fake Teachers, and Fake Assets. And I'm not the most popular guy, but at least I say what I say and you say what you say, and there's alternatives. There's things you can do better. So that's why I speak, and I'm not popular. I wish I had good news. And, you put your money in a 401k, you would retire a millionaire, but it ain't going to happen, Joe.
Well, you keep bringing up fake assets, and I've heard you say regarding your upcoming book release, Fake, in 2008, we didn't really experience a real estate crash, but if you understand the underlying reasons, what we really experienced in 2008 was a fake asset crash. Tell us about that.
It was just one of the biggest disasters in world history, and it only got worse because what they did was they took mortgages and they sold them to subprime poor people. And they took those subprime mortgages and they repackaged them as derivatives, credit default swaps, mortgage-backed securities, and they sold them as assets to governments and pension funds and rich people all over the world. And when those subprime mortgage holders, subprime people who never could have bought a house, couldn't pay the mortgage, the whole thing came down like a house of cards. So it was basically Wall Street manipulating the ignorant, called borrowers who wanted a house, the American dream, or whatever you want to call it, but they destroyed the economy. And did any of them go to jail? No. They got bailed out by the taxpayer. I mean, that's, to me, I don't know how you spell criminal, but that's pretty close to it.
Yeah, and that's why they're going to do it again. They weren't punished for it. You bring up derivatives like credit default swaps, mortgage-backed securities, which water down real assets so much to the point that a lot of times people don't really understand what they're investing in anymore. And really starts with a history lesson. 80 or 90 years ago, the Glass-Steagall Act, that was enacted in 1933 in response to a worse crash, the Great Depression. And what the Glass-Steagall Act did was that separated commercial bank activity from investment bank activity so that banks could not take wild risks with everyday depositors, savers' money. But President Clinton took us off the Glass-Steagall Act in 1999, and a lot of people say that the global financial crisis of 2008 was caused by banks' speculative activity again, and that's the exact same thing that the Glass-Steagall Act tried to get us away from.
Correct. Nothing's changed either. What has changed is that in 2008, the markets came down when there was 700 trillion with a T in derivatives. Today, there's 1.2 quadrillion with a Q. And so when this next baby fires off, it might be the end of the world as we know it. And I'm not trying to be pessimistic. Everybody says I'm pessimistic. But I'm also saying there's things you can do. Why accuse me of being pessimistic when I was on CNN? You can see me calling the fall of Lehman Brothers and all this with Wolf Blitzer.
Right.
And everybody says you're a pessimist. I said, well, it did crash. Remember that? They go, yeah, but you're a pessimist. I'm going, okay, thank you. You were warned.
At what point are you a pessimist and at what point are you a realist?
Yeah. That's why I wrote Rich Dad, Poor Dad at my cash flow games. That's why I write and all this. I know it doesn't do much good for the masses of people because the masses of people have been brainwashed to go to school and get a job, work hard, save money, buy a house, get out of debt, and invest in the stock market. That's the mantra that the rich want you to believe. Then they get angry at the rich when they should get angry at the school system. Today we have AOC, what's her name? Alexandra Ocasio-Cortez or something.
Yeah.
All these people who are socialists, Kamala Harris, I forget the name, Pocahontas, Trump calls her. I mean, it's terrifying. We're going back to socialism now. And socialism is what took over Venezuela. So that's why I speak. I'm a Marine veteran, a Marine pilot. I flew in Vietnam. And I fought for capitalism. I didn't fight for socialism, communism, or fascism. And it's a free country. You can choose what system you want. You can vote for the people you want. But I'd rather be a capitalist than a communist, socialist, or fascist. And that's who's running for office today.
I would too. I think socialism might sound good on the surface in a headline, but you don't have to go very deep to learn that there are a lot of unintended downstream consequences.
Well, socialism is the Robin Hood theory of finance, take from the rich and give to the poor. And that's why I have a hard time with her name. I'm sorry. She wants to tax the rich at 70% or something like this.
Yeah.
I mean, she's a college graduate who was a bartender with no real experiences. And she's a good person, I'm sure. But doesn't she know that if you're in the 70% bracket, you're rich enough to afford the best accountants, attorneys that you'll pay no taxes anyway? So, I mean, they don't understand that. I don't pay taxes. Trump doesn't pay taxes legally. But they never teach you that in school. So then they get angry when President Trump, I know a lot of people don't like the guy, and justifiably so, because he says things he shouldn't say. But who wants to pay more taxes? Because what happens is when you try and tax the rich, the poor and middle class are the only ones who pay the taxes. That's the reality.
Alexandria Ocasio-Cortez, she has a lot of Instagram followers. I think that's what matters to some people, and that's what the problem is.
I don't blame her, and I understand her point of view. That was my whole family's point of view.
Yeah.
My family are very good people. They work for the Peace Corps. I flew for the Marine Corps. We're just different people. And I believe in teaching people to fish, and the socialists believe in giving people fish. Well, whose fish are you going to give? Yours? Mine? That's the challenge. And then what did Churchill say? Is that the socialists finally wake up when they find out, when they run out of other people's money, which is their money, it just runs out of money. They go broke. Everything goes broke. So that's what's happening in Venezuela. But that's what people are asking for it right now.
I can't think of one world history example where socialism has worked, not one.
Well, it works for the oligarchs, the rich, like Putin and his boys up there. It works for the rich in China, the princelings and all that. But what happens is socialism is no different than those in control. He who owns the gold makes the rules, and who makes the rules takes the gold. And that's what's happening. That's why I brought up, what do you call it, the permanent fund or something like that?
The permanent fund dividend.
Isn't it broke? We're going broke?
It was. There wasn't enough revenue from oil input the last few years.
Yeah, because the price of oil keeps going down. And now people are scrambling because they got so used to the handout. And I'd like it if people gave me money too. But I also know that it robs me of my personal self-esteem and my power. And then when they take that money away, you don't have the skills to survive. I spent a lot of time in Alaska. I was just there. Beautiful country, great people. But without financial education, Alaska is like Venezuela, a very rich country with a lot of poor people in it. That's the problem without financial education in our schools.
So a lot of people don't realize that there really is an opportunity cost to focusing on saving money. Where does that come in at the consumer credit level? For example, I know in the Rich Dad school of thought, you would have a different mindset around buying a boat. So if a consumer wanted to go out there and they wanted to buy a boat, rather than saving money for a while to buy the boat and then pay all cash, you might have a different way for a person to go ahead and afford that boat. Maybe they would service boat debt with cash flowing assets. Just tell us about the Rich Dad mindset and how a consumer might go out and buy a boat and do it in an abundantly minded way.
I own a 60-foot boat I wish I didn't own. But the way I bought that whole thing was that I very simply bought a mini storage, and the mini storage cash flows money to pay for my boat. The boat's in Hawaii. And I'd like to sell it. And if I want to buy a 60-foot sailboat, you can have it. But that's to say the happiest day of your life is the day you buy it, the happiest day of your life, second happiest day of the day you sell it.
Yeah.
But if you use a boat for commercial fishing or stuff like that, then it's an asset. But if you're using it for pleasure, it's a liability. It's not bringing money in. So my boat in Hawaii is bringing some money in because it's in a charter pool. But the way I bought it was buying a mini storage first, and the mini storage cash flows to buy the boat. I mean, that's how you get rich.
And would you still take a loan on the boat and have the cash flow from the mini storage units?
Oh, yeah, of course. I don't mean to be disrespectful, but I am. When somebody says live below your means, why don't you say, here's a hammer and pound on your thumb, I said, look, who wants to live below your means? I like having this big boat. I wish I didn't have it, but I'm glad I had it. And I also like, I drive Ferraris and I drive Rolls Royces and things like this, but I don't pay for them. My assets pay for them. So I buy assets first, liabilities second. And that's why Rich Dad, Poor Dad, people, what's Rich Dad, Poor Dad about? It's very simply a book on accounting. And accounting is, if you've ever done accounting in school, it's the most boring subject on earth. But Rich Dad, Poor Dad has sold millions and millions and millions of copies because I made accounting interesting. That's all I did. Oh, if I had learned this in school, I would have done things differently for the rest of my life. That's why, I'm glad I wrote the book. I created my cash flow game. I continue to speak. I continue to write because we're being led by idiots. We're being led by a lot of people with no financial education, and they actually believe in working hard, saving money, and paying taxes. Well, if you want to do that, then just stay in school. I'd rather not work hard. I'd rather make a lot of money and not pay taxes legally. That's who I am. I am a capitalist. You want to be a socialist? That's your choice. That's not my choice. Free country.
A lot of people, most of whom are not financially educated, they run away from debt and they run towards savings. But when you're on top of debt and you have someone else service your debt payments for you, you're effectively running away from savings and running toward debt. If it weren't for debt and the ability to use leverage, I wouldn't be anywhere right now. I wouldn't have the time to talk to you, Robert. I'd be away working, trading my time for dollars with an employer. I embrace debt for leverage, and as long as it's controlled with a positive cash flowing income stream, I want more of it. I want to go up to $10 million, $100 million of debt if it's taken out that way. Why wouldn't I?
I don't know. It sounds logical to me. I don't do this to brag or do anything or criticize. I'm just really concerned about this growing gap between the rich and everybody else. And as you guys know, in Alaska, this permanent fund, or whatever you guys call it, it's putting a lot of people in trouble right now because they got so dependent upon the handout. And that's what Ocasio-Cortez and Kamala Harris and, I don't know, the woman they call Pocahontas. I don't pay much attention to politics.
Elizabeth Warren.
They're primarily very good people, smart people, highly educated people, I assume. But they all think about giving people fish. I'd rather teach people to fish. And there's some people that need to be given fish, They're really that needy that we should give them things. But most of us can do something, so I'd rather teach people to fish. That's just a free country and a free choice. Unfortunately, it's getting very, very dangerous right now because, with fake news, is what Zuckerberg and Sandberg did at Facebook. And they're destroying our democracy, with fake news, misinformation, attacks. People are attacking people on social media. It's really anti-social media. What's going on in this country, in this world today concerns me. So that's why I wrote Rich Dad, Poor Dad and Fake, because I don't save money. I save gold and silver, coins, real gold, real silver. And I'm very concerned about the economy. So I'm also concerned about people. So that's why I sound like an idiot saying what I say, but if you look at the fact, Jack, the people that are saving money are getting hammered right now. So that's the problem. I don't know what's going to happen to this country. Like I said, I fought for capitalism in Vietnam. I didn't fight for socialism, fascism, and that stuff, or communism.
If you're doing what everyone else does, you're probably not thinking out there. Well, with the next downturn, we know that an economic downturn is imminent. Most people can agree there's going to be one. They just disagree on the timeline. I think you're giving us some clues right now, but how is a person really best protected in the next downturn, in your opinion? You've already brought up real assets.
Well, I've always loved gold and silver. My book, Fake, starts with me flying in Vietnam and going to look for gold behind enemy lines. So I've been a gold nut for years, and people, well, you've lost a lot of money. Well, the first gold coin I bought was a Krugerrand, South African Krugerrand. I paid $50 for it in Hong Kong, and today it's worth about $1,500. So I haven't really lost much money. I could have made more money, put it in Apple or something, but I really don't care for stocks. I like real estate, I like oil, I like gold, and I like businesses. So I invest in what I love, and if you like stocks, invest in stocks. You love 401ks, invest in them. But I invest in what I love, And if I love what I study, I'm better at it than somebody who's investing just in something they don't even know what they're doing, like a 401k or a mutual fund or an ETF. I am an advocate of taking control of your life by taking control of your education. And as we know, most school teachers, like I said, they're good people like my poor dad, but they know nothing about money, nothing.
Now, when it comes to financial education in real assets, you have a system or a phrase known as infinite returns, how you can produce an infinite return for yourself. You begin by investing your money, but at some point you withdraw your money from the investment as the investment continues to grow, and therefore you have an infinite return because you don't have your money in it any longer. Tell us about infinite returns, or give us an example.
Well, infinite return is, I wrote about it in Fake because I never realized I do it automatically. In 1972, when I came back from Vietnam, I took a real estate course, and I learned how to invest without money. It's called OPM. I have none of my money in any of my deals, zero. So now when I hear somebody crying and whinging about, I don't have any money, I can't invest, it doesn't compute in my brain because I've never needed money to invest anyway. I just take courses. So an infinite return is use 100% of other people's money or use no money at all. And that's called financial IQ, financial intelligence, and all that. See, anybody can use their own money. It takes financial genius to use none of your money. So like the Rich Dad company, I started with nothing. I've started many businesses with nothing. So that's an infinite return. And to me, it makes more sense than crying and on the side of the road saying, I can't do anything because I don't have any money. So once again, I cover that in the book Fake a little bit. There's a video clip you can access of me talking with my accountant, Tom Wheelwright, talking how we go for infinite returns. The infinite returns means you have nothing, zero of your money in the investment, in the asset. And that's why I like what I do. It's kind of entertaining, and that's why I write and I teach. Everybody can do it, but very few people will do it, as you know.
Knowing and doing are two very different things. So with an infinite return, for example, potentially buying an apartment complex, then performing a renovation, then getting a refinanced greater loan for the value-added condition, being able to withdraw your money then, and then hold on to the asset.
Well, that's pretty advanced for most people. My first infinite return was an $18,000 condo on the beach in Maui.
Yeah.
I just bought it with a credit card. I had none of my money. I had debt on it. So it was 100% debt, and I made $25 a month. Once I understood that, my brain shifted gears. And I'm doing it for the rest of my life. Since I was 26 when I did that. I've been doing it for the rest of my life. So if you look at, as my rich dad always said, only lazy people use their own money. And that really upsets a lot of people because, well, I'm not lazy. Well, I'm not talking about being physically lazy. I'm talking about being mentally lazy. Figure it out. How could you get this thing for nothing? And if they can't figure it out, it means their brain's not functioning or they're lazy. Anybody can work hard, but not everybody can figure out how to get something for nothing and make money.
Robert learned by doing. That really amplified his knowledge base when he bought that first condo in Maui. You, the listener, are going to learn by doing even faster than you are by listening to Robert and I. And you mentioned don't live below your means, expand your means, Robert. And here's what financial intelligence is to most people. You know, some people think financial intelligence is not just knowing where to find the 50-cent coupon for Eggo waffles, but knowing and building a system so they can find that 50-cent coupon for Eggo waffles every week. Now, maybe there's nothing so wrong with that, but some people think that that's all there is to financial intelligence, and I think that's living below your means, cutting your expenses.
There's a million ways you go to financial heaven. And there's a billion ways you can go to financial hell. It's up to you. And Unfortunately, most people go to financial hell because they simply went to school and learned nothing about money. They're not bad or good people. They're just not educated financially. And unfortunately, as you know, most of our political leaders are not educated financially either. And I'm not Republican or Democrat, but the Clintons, Trump and I wrote 2 books together. I'm not taking his side, but I don't know why he didn't go after them. Because they had the Clinton Foundation, which was just one of the big Ponzi schemes, was basically you donate money so you can pay to play. You could get political favors from Bill and Hillary. And then they go after Trump because he owns hotels. I think it's funny. If it wasn't so serious, it would be hysterical what's going on politically.
Yeah, we could almost laugh at that, but not quite. Well, you've been quite a prolific writer. You're best known as the author of Rich Dad, Poor Dad, that greatest selling financial book of all time. You also wrote The Cash Flow Quadrant. More recently, you wrote Why the Rich Are Getting Richer. Any last bits to leave us with on your upcoming next book, Fake, which is going to be released really soon? It shows your hand giving the thumbs down sign on the cover. So what are some of these lies that are making the poor and the middle class poor that you cover in the book, Fake?
How about go to school, get a job? Who pays the highest taxes? People that went to school to get a job. Then get out of debt. Why would you get out of debt when the U.S. dollar is based on debt? Why would you invest in the long term for the stock market when those are fake assets making Wall Street richer? It doesn't make sense to me. If you like that, go and do it. But as I always say, what does school teach you about money? What do your teachers know about money? What do your political leaders know about money? And we wonder why we're in trouble. We wonder why the gap between the rich and poor gets wider and wider and wider. And when artificial intelligence hits, that's when the information age really begins. And we ain't seen nothing yet. So meanwhile, I'd rather be holding gold and real estate and investing in food and water and real things versus fake things. That's kind of my philosophy. I'm not saying everybody should do it. And I'll say it again, there's a million ways to go to financial heaven, but there's billions of ways to go to financial hell. And, when I was reading this article about the permanent fund, whatever you guys call it, a lot of people are in hell because they depended so much on that cash flow coming to them. And I feel for them. It takes a long time to do what you're doing, to build assets and to build cash flow. It takes a while. It takes education. But you'll never find that in school. That's the tragedy today. That's the tragedy. So Elizabeth Warren wants to tax the rich and take from the rich and give to the poor. That's called socialism. That's Robin Hood. And it's never worked. So I don't know why they keep promoting it. Maybe they're so desperate to get elected by poor people. So I'm very concerned about this country. I'm very concerned about people who are struggling financially. But giving people money, in my opinion, has never worked and never will work. It just creates more poor people.
We talk about what you don't learn in school. Maybe you didn't learn until after school that if you get debt, inflation helps debase your debt and makes your debt go away. But inflation hurts a saver. And I think to sum it up, inflation really has a hard time touching you when you invest in real things. Real items cannot be inflated away. Well, Robert, it's been great having you on today. Any final thoughts for the listeners?
You have a choice. You can either get educated at school or get educated at home. You can buy my book, Fake, or Rich Dad, Poor Dad. You can play the cash flow game and teach each other. The whole mission of Rich Dad is to elevate the financial well-being of humanity. And the way you do that is by bypassing school and have people teach people. Because schools will never teach you what my rich dad taught me. You can help yourself and you can teach other people. And that's why what you're doing, Keith, is a great service to yourself as well as the people, because our school systems will never teach what my rich dad taught me. That's what I have to say. And I'm very concerned about what's going to happen in the world in the next few years.
Well, Robert, your decades of books and teachings have inspired us. Thanks so much for coming back onto the show.
Thank you.
Let's review what we learned. School teachers didn't teach you about money. Political teachers didn't teach you about money either, nor did anyone else. And maybe that's why some people have found our message here at Get Rich Education so profound. You never expected your messenger in life on these things to be coming from a voice through a device that can fit into your pocket. Well, that's how it happened. So let's not overcomplicate this. When an asset is real, that typically means that its value cannot fall to zero, and it typically pays you every month to hold on to it, versus if it's not real, it can go to zero, and in order to get any income from it, you would have to sell it. In order to profit, you'd need to get rid of it. Please take this permission from me, this perspective from me, to start investing in real assets if you haven't. I will tell you that even if you fail small, I contend that would be better than doing nothing, because consider that a small failure will teach you so much. Doing nothing won't teach you much of anything. A link to Robert's forthcoming book, Fake, is linked in the show notes for you. The book is about fake assets. If you only remember one thing from this show today, remember that assets put money in your pocket. Now, if you've ever been looking for a speaker for your event, it is hard to think of a more electrifying financial speaker than Garrett Gunderson. What happened the last time Garrett was on the show here? Your real rate of return from the stock market is often zero, even when the stock market rises at historic norms, when it's inflation adjusted, when it's fee adjusted, when it's emotion adjusted, and the taxes you have to factor in, because often you're still paying taxes, even in a tax advantage plan.
You're being friendly saying zero, right?
Garrett and I went on to discuss how your real ROI from the stock market is less than zero after inflation and emotion and taxes and fees and volatility. That was from Get Rich Education, episode 92, How to Discover Your Investor DNA with Garrett Gunderson. Well, Garrett is coming back onto the show with me soon. That is going to be amazing. People that have a mentality of trading time for dollars have a certain way of looking at their entire life. But people who realize that the mission in life is to build things that pay you to own them have a different way of looking at life, and I would submit a substantially better life. If you happen to be a new listener, Get Rich Education is not Get Rich Quick. I don't believe that Get Rich Quick exists, but see, most people don't build any significant wealth at all. I run Get Rich Education and GetRichEducation.com, Get Rich Education TV, and our blog and our YouTube channel and everything else. I authored the 2017 best-selling book, 7 Money Myths That Are Killing Your Wealth Potential. I also serve on the Forbes Real Estate Council, not for too long there, just since 2017. I also write real estate investing articles for Forbes. I'm known for saying some things like don't follow money, make money follow you, financially free beats debt free, and do the right thing before you do things right. I expect to bring you next week's episode from the far southern Caribbean when I'll be in the Netherlands Antilles, either Aruba or Bonaire at showtime. Until then, there's one other thing that I'm known for saying: don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
Countless investors get killed on their long-term maintenance costs in their rental property portfolio, but that's far less likely when you buy brand new construction. Let me tell you about my friends at JWB Real Estate Capital in Jacksonville, Florida. They pioneered the build-to-rent model that allows clients like you to invest in new construction, turnkey rental property. That's why JWB has been featured on the front page of the Wall Street Journal and other national media. If you want new construction rental properties in your portfolio, talk to JWB. Give them a call at 904-677-6777 or visit them at newconstructionturnkey.com. The preceding program was brought to you by your home for wealth building, GetRichEducation.com.